Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase, and things are getting interesting, guys. Things are getting very interesting. Last time we spoke, Bitcoin had it had broken above our $3,400 resistance. It was sitting right in this zone here, and I told you I wanted to see price break above 3,600 and at least start consolidating within this zone, if not break above this zone between 36 and 3,800 here. And that's exactly what we saw. I told you I wanted to see a nice decisive break above. We had that perfect decisive break above. Price came up, hit a resistance here at 3,800. Wick right through, but the bears pushed that wick right back down. And then we came down for the all-important retest, guys. And I always talk about this is where you want to start thinking about if you're going to enter into a position, guys, you want to always buy the retest. But more importantly than entering into a position, we wanted to see how this was going to react on the retest. Price came back down, didn't even make it back down to this 3,600. What was support should start acting, or excuse me, what was resistance should start acting as support. It did, and it didn't even need to come down to test 3,600. The support, it found support at about 3,650. Price came back down and then just had a nice impulsive break right above 3,800, guys. And of course, it stopped right where we knew that resistance would be between 4,120 and 4,000 that we had marked out here. And that's where we're finding resistance right now. So the question is this thing sustainable? Everyone wonders, is the bottom in? Is this it? Should I go long? And whether or not the bottom is in, the long-term bottom is in, guys, I'm not convinced of that yet. It might be, but we're not seeing that massive reversal on higher time frames at all. This was just a nice little. Now again, this could turn out to be the bottom, but right now we're not seeing that. So what does that mean? That means that if you're looking to dollar cost average in, I've always told you guys, dollar cost averaging in for the long haul. This is all these prices were not bad ideas to dollar cost average in if you're looking at holding for a year or more. Certainly. But if you're more of a day trader, I would be taking more of a conservative look. In other words, buying some of the pullbacks for very quick scalp trades. But if you're looking at the swing trades, the higher, where typically, as far as I'm concerned, that's usually where I make my most of my profits on swing trades. I'm not comfortable making a swing trade. Very quick scalp and or day trades. That's fine. Buying the pullback here, and I may even buy the pullback if we do end up coming back here, and it does look like we may get a little bit of a correction here in the short term. May take a chance and buy that pullback here, but I'm not going in heavy at all until I know either the bottom is in or until I can see a very good setup for a nice little swing trade. I'm not seeing that yet. That being said, guys, you can make a good case for two things here. You can make a good case that this is a dead cat bounce. In fact, if I zoom out here to the weekly chart, kind of pull it out here so you guys can see a little bit better. And I apologize for my messy chart here on my support and resistance areas. But yeah, zooming out here on the weekly chart, you guys can see this is, just a, nice little rise here, but nothing like what we've had in the past. I pointed out in the past, for a very strong bounce, very strong reversal, something like we saw here with this just massive bounce. There was no doubt that this was a temporary bottom. Now it was temporary, but still, there was no doubt that, this turned into a very strong 3-week recovery before this thing just tanked again. So this is the kind of candle I'm really looking for to tell me that we've seen at least a temporary bottom. But for now, guys, this is looking healthy in the short term, but it could be, as I said, could be a dead cat bounce. Since we've had price fall down from our $6,000 support here, we've seen no kind of major bounce, and you would typically, especially when we've had such a bearish run here from a support that held for so long there at 6,000, you would expect some kind of a nice little bounce here, and this is the first one that we're really seeing, first nice bounce. So certainly this could be a dead cat bounce, and certainly you want to be make sure you are being very, very careful if you're looking at entering into any kind of a large position. In other words, I would just be kind of sitting on the sidelines here, watching and waiting more than I would be ready to more than I would being willing to enter into a very strong long-term position here. I would just kind of be sitting on the sidelines, waiting for more confirmation. That being said, as I said, we are seeing some interesting signs here. So let's look at this. This is on the daily chart here, and let's look at this daily chart and see if I'm looking at this and I want to try to pull a fib, and I'm thinking, where am I going to establish my swing high? If I kind of look at this as my overall structure here that I'm working with, obviously this thing just ended up tanking. Then we kind of made some sideways movement here for about 3 days, and then it kind of continued down. It's this structure here that it looks to me like that swing high. right here, this area as far as where I'm going to pull my fib from. And if I you kind of, it's kind of like being a detective. You kind of look and see, where algos are trading, because remember, you're trading against a lot of algorithms, so where they're pulling their fib from, where their swing high is. And to me, right here, pulling it right off this swing high makes the most sense, and I'm going to show you why here. Let me make sure I get it right on the mark. There we go. And let me get right on the mark here. Right on there. There we go. So if I pull my fib, swing high, swing low, what do I have here? Pardon me. We can see it bottomed out here, came up, and what do we have? We had a first major fib level, the 236. We had a price react to that. Price came back down. Obviously, the wick broke through here, but the major body came back down, broke back down, and then we continued up. So it certainly acknowledged the 236, and we can see it acknowledged it again when price came back down here and retested, and that started what was resistance, started acting as support. Then what happened? Price came up. We tested the 382, rejection. Tested it here again. The bulls pushed it through. The bears pushed it right back down by a wick. Again, rejection on the 382, and then finally we break through decisively the 382. We can also see with this wick here, where did this wick rise to? Almost perfectly right here off of the 50. So then rejected right at the 50. So again, a slight acknowledgement of the 50, albeit nothing major, and then we just pushed right through the 50. But then what we have is the all-important golden ratio, the 618, or even more importantly, the golden pocket, which for those that aren't familiar, that's the pocket between the 618 fib and the 65 fib level. We know that the 618 is the golden ratio. Oftentimes we slightly penetrate that golden ratio and go into what's called the golden pocket, and that's that point between the 618 fib and the 65 fib. We can see that price came back up and found perfect resistance right there inside that golden pocket, which you would expect, and has not been able to penetrate that golden pocket as of yet. And of course, that's typically where algorithms start to change. If you can break above that 618, algorithms will typically start to go long, at least in the short term. Prior to that 618, a lot of people, pardon me guys, a lot of people are targeting that 618 for a bounce and possibly coming back down for a continuation of the downtrend. So I'm watching this very, very closely. Pardon me. You could even make a case to enter a short position here. I wouldn't, but you could make a case, being that we haven't broken above that golden pocket as of yet, and this would be a logical area for price to return and continue the downtrend. But let's watch and wait and see how this reacts. We knew that this area was going to be a strong resistance. We've had that marked out here on the chart here for quite some time, between $4,120 and $4,000. That's been a strong resistance. We've known that. We've marked it. But knowing that we have our fib levels also giving us evidence that that is a strong resistance as well, just goes to show you that we have marked this correctly. And so it's going to be very interesting to watch and wait, see if we can break above this golden pocket, and if we do, see if it comes back down, starts acting as support. What was resistance, you want to see it start acting as support. If that does happen, that's going to be an extremely, extremely, extremely bullish sign, guys, if we can break above this golden pocket with consolidation, not just by a wick, but with consolidation. That'll be an extremely, extremely bullish sign, guys. So let's wait and see if we can do that. One of the other things that we're keeping an eye on here, though, guys, which gives me a little bit of pause, if I pull out here and look at the daily chart, pardon me. Sorry, guys, had to pause the video there real quick. Blow my nose. That's probably too much information for you. So anyway, looking at the not the daily chart here, pulled back into the to the 4-hour chart. What are we looking at here, guys? Well, if I look at this from point to point, this point to this point, what do I have? Obviously, this has been a short-term uptrend, and price created a higher high. If I look at the same point on the histogram here, on the MACD, and look at, again, draw straight down, look at the exact same point, what do I have? Price created a lower high. Of course, this being in an uptrend, guys, that is bearish divergence, and that would suggest that price, at least temporarily, we may be in for a little bit of a correction, maybe coming back down and retesting, this 3,800, what was resistance, maybe hopefully will start acting as support at 3,800, and that would not be a bad time if you're looking for a quick scalp and or swing trade to put in a very quick scalp trade there, targeting, maybe 3,800 targeting 4,000, 4,100 would not be a bad quick scalp trade if you're looking at doing that. Again, not financial advice, just kind of something that I'd be watching. We can see on the 4-hour chart we have that bearish divergence. We can see that we're very oversold on the 4-hour RSI. All things that suggest we might see a temporary pullback here. That being said, looking at the daily chart here, we're not seeing any kind of divergence at all, guys. Actually, here on the daily chart, I take that back. I take that back. I stand corrected. Looking at the daily chart here, and again, if I look point to point, so if I look over here on the daily chart and draw a line, and I'll draw it out here so you guys can see a little better from all that mess. In fact, let me get rid of this Fibonacci so you can see a little better. There we go. So yeah, if I draw point to point here, price created a higher low. Now overall, looking at this overall structure here, what is this? This is obviously a downtrend, and this is a slight little correction to this downtrend so far. So far, we haven't had a trend reversal. We haven't broken up above new highs yet. So overall, this is just a correction of the continued downtrend here. So that being said, considering that this isn't a downtrend, looking at the daily, and I come down to the exact same points here on price, or excuse me, on the histogram, and I draw my line. What do I have? I have a higher high. Now, considering that this is looking at the daily chart on the higher time frame, this is in an overall downtrend. Okay, and I'm looking at the upside of the chart here. That is unfortunately hidden bearish divergence. So that's hidden bearish divergence. So we're getting hidden bearish divergence on the daily. We're getting and then looking at the 4-hour chart, obviously, in this uptrend, we're getting just regular old bearish divergence. So both bearish divergence, both hidden and regular bearish divergence suggest that we might see a temporary reduction in price here. Now, that might be a good buying opportunity. Let's wait and see how price reacts here. If we do end up dropping below 3,800 here, especially if we drop below this little structure right here, so if we drop below, say, 3,700, that will confirm it, then I'm going to start to get a little more concerned here. Now, as long as we stay above 3,600, it's just going to be concerned. You know, I'll still be watching and waiting. I still think that this might still be, you know, a continuation of the uptrend. But if we do break 3,600, guys, that's going to, things could get ugly very, very quick. So just things to kind of keep an eye on, things to kind of watch. Looking at longs versus shorts. Pardon me. Now, shorts, it's getting very interesting. Shorts kind of dropped off the board here, and then they've been rising as price here has been rising. So, you know, overall, it was between the loss and the gain, it's been basically a wash. Shorts are right back where they were. So shorts are remaining relatively unchanged overall with this latest move. They're kind of basically stagnant. They dropped, they came right back. They're basically overall the net gain is nada. They're just basically stagnant. Looking at longs, however, longs have dropped off the board here dramatically. In fact, if I look over here, I'll just show you here. I think it's been like 30%, but let's look. Longs dropped off the board. Yeah, 31, almost 32% longs have dropped here from their high. So of course, you know, market makers, they're going to be looking at this. Longs have dropped off the board. Shorts are remaining fairly stagnant, even in this uptrend here. So market makers have incentive to try to liquidate those shorts. Longs aren't on the board, so they have incentive to try to liquidate those shorts. How do you liquidate those shorts? You bring price up. So this would explain why we've had this increase in price. This could just be, and I say could, I'm not saying this is, could just be a temporary short squeeze. Could be a dead cat bounce, could be a temporary short squeeze, could be a combination of the two. But you know, if either of those are the case, you know, this thing could get very ugly very, very quickly. Now, we still could see some more upside. As I said, we have longs off the board and shorts are stacked. So if market makers want to try to take those short positions off the board, they could drive price up a little bit more to try to do that. And I think if they did, they would have to bring price up above 4,400 here, because I think a lot of stop losses are sitting right in on shorts. A lot of these short positions, their stop losses are sitting right into this zone at about 4,500-ish, somewhere thereabouts. So they'd have to at least drive price up above 4,400 if they really want to liquidate those short. And they could. They might. Let's wait and see how that plays out. And then it even could end up collapsing back down. The difference is, if they do that, they're playing they're kind of gambling if the goal is to bring price back down afterwards. Because if we look at overall volume, sorry about that, guys. If we look at overall volume here, guys, and actually let me refresh it here so we have the latest data. Overall volume on Bitcoin sitting at 8.1 billion. That is not insignificant, guys. And I always tell you, we need to watch volume. Volume is going to be key if this thing is to have any legs. And what's that number that I always give you? We need to see daily volume above 10 billion on a consistent daily basis, not for 1 or 2 days, but on a consistent daily basis to know that new money is entering into the market. That being said, this is absolutely a trend in the right direction. Does it mean that a bottom is in? No. Is it interesting? Is it trending in the right direction? Could the bottom be in? Yeah, that's possible. It could be. Not saying that it is, but it could be. We're certainly seeing a lot of people interested in the market, a lot of people entering into this market, and this is buy volume. That's what's so interesting. This is a lot of buy volume here at this 8.1 billion. We've not seen this much buy volume since well, we haven't seen this much volume since November 20th, but this was all sell volume here when we reached up to about 8.4 billion. But again, this was all sell volume. This is when price was dropping. We haven't seen price up above 8 billion, or excuse me, we haven't seen daily volume up above 8 billion for buy volume up above 8 billion since, I believe it's been since May of since let's see. No, see, that was a little bit, almost maybe April. No, actually, we did have one in May. Yeah, so since May 4th, we haven't seen, the last time we saw buy volume like this was May the 4th of 2018. So it's been, almost 7 months since we've seen buy volume. So this is again a step in the right direction. Something else I'm keeping an eye on. If I come over here and I look at, this is on the 4-hour chart. If I look at the 4-hour chart, we can see that we just broke above the 200-day moving average on the 4-hour. Now it's on the 4-hour, not on the daily, so it's not nearly as significant. That being said, it is still, it is still something to watch. That is still a bullish sign. And if we can close above the 200-day moving average on the 4-hour, that's going to be a very bullish sign. Let's wait and see. Now we're reaching the top of the Bollinger Bands here on the 4-hour. So again, suggesting a possible correction here in the short term. Doesn't mean that we're coming back down to these lows. Just means, this could be a correction. We'll have to watch and wait and see how it comes out. I certainly wouldn't be entering into a long position now. I'd certainly wait to buy the correction because all signs are indicating that we may see a temporary pullback here. But coming in and looking at the daily chart, what do we have? Finally, for the first day, we just broke above this well, actually, we broke above it yesterday, but we closed still below this 21-day EMA, 21-day exponential moving average, this yellow line here. And this is what I constantly tell you. This is on the daily chart, guys. Remember, when I always tell you that this 21-day EMA on the daily chart is extremely relevant. You always want to keep an eye on it. It typically can signal a momentum shift, both in favor of the bulls or the bears, depending on if we're breaking above or below. In this case, we're breaking above. Now, I also tell you that we need a decisive break. As of right now, we have not had a decisive break. I need to see a daily candle both open and close above the 200-day EMA. Right now, we have not had a daily candle even close above the 200-day EMA. So, assuming that today's candle closes above this 200-day EMA, guys, if that does happen, that's going to be a very bullish sign. But that's not going to signal, in my opinion, I will not be looking at that as a trend reversal. Now, if on the following day we have a daily candle that opens and closes above the 200-day EMA, then I'm going to start get excited that this is a trend reversal, at least a temporary trend reversal. But we can also see we're flirting with the top of the Bollinger Bands here on the daily. Again, all things that suggest a possible temporary pullback. And I wouldn't mind, again, pullbacks are healthy. That's not necessarily unhealthy. And if we can pull back here and what was resistance starts acting as support, this 200-day EMA starts acting, this 21-day EMA starts acting as support on the daily, that's going to be an extremely bullish sign. Something else I'm watching this 8-day EMA, this blue line. It looks like it's getting ready to possibly cross in the next couple days above the 21-day EMA. If the blue line crosses above the yellow line, in other words, the 8-day EMA crosses above the 21-day EMA, again, guys, that's a very bullish sign of strength on the daily chart. It's a very bullish sign of strength. So let's watch and wait how things end up playing out there. So I'm going to go ahead and wrap things there, guys. Went a little longer than I wanted to. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Working. Signing out.